This is Business Edge on News Central. I'm Tolulope. Adeleru-Balogun. Our headline story: South Africa's GDP per capita declines to levels last seen in 2005. Now, South Africa's economic climate has presented a number of challenges in the run-up to the 2021 budget. Like many countries, the South African government needed emergency funds in mid-2020 in the middle of the COVID-19 pandemic. This came as it faced an expected budget revenue shortfall of 312 billion rand for 2020. Now, the gross domestic product per capita has declined to levels last seen 15 years ago. What is the way forward for Africa's most industrialized economy? This is our focus today. Welcome. This is Business Edge. Statistics South Africa's latest gross domestic product data has revealed that the country's ailing economy continues to be outpaced by its population growth. Recently, the statistics body published its GDP numbers for the fourth quarter of 2020, which revealed that Africa's most industrialized economy is projected to have declined by 7% for the full year 2020. While this decline was largely expected given the COVID-19 lockdown, it points to another problem that has been troubling the country for a number of years. That is the slowing GDP growth per capita. Now, GDP growth per capita is a measure of a country's economic output, accounting for the number of people who live there. It is often used as a more secure and accurate representation of real economic growth in a country, as a higher population should yield a greater GDP output. However, while South Africa may have largely avoided headline GDP decline over the years of economic hardship prior to the pandemic, on a per capita basis, citizens have been getting poorer and the growing population has become less productive. Analysts believe that GDP per capita will continue to decline in the medium term as the population continues to grow while GDP contracts, meaning that South Africans will on average become poorer over the next few years. A 2020 PwC calculation of different scenarios suggests it could take between 2 and 5 years for GDP and employment to return to pre-lockdown levels. Now, joining me on the show is Nwizu. He is the co-managing partner, Comercio Partners, and we're going to take a breakdown, look into what South Africa needs to do to get back on track. Nnamdi, good morning, and thank you so much for joining me on Business Edge.
My pleasure.
So for a quick insight, a lot of people know about GDP. We hear gross domestic product often enough, but for better understanding, let's simplify GDP per capita, where the per capita aspect of it comes in. What does that measure and how is it measured?
So GDP per capita, basically looking at the GDP that you have for the country and trying to divide it by the population, and helps give you an idea of how much the GDP is allocated to every single citizen within the country. And you realize that more developed countries, richer countries, tend to have much higher GDP per capita income, which basically shows that, basically helps show the standard of living for the citizens of the country.
Yeah. All right. So something interesting to note, which has happened to many economies, is that there's the difference with what was happening before the pandemic and how the pandemic has sort of exacerbated some underlying and present issues as it may be. So for the while now, South Africa has been facing a higher, faster population growth rate than its GDP. And what we are hearing, as you said, is that higher populations usually should give us higher GDPs. Why has that not been the case for South Africa for a while now, before the pandemic hit?
Well, so with your GDP growth, the major question would be if your population growth is outstripping your GDP growth. So if you look at South Africa GDP numbers, really haven't been good over the last few years. And in fact, we are technically in a recession prior to COVID.
Yeah.
So you had quarter-on-quarter contractions going from about minus 0.8 to minus 2% from Q3 2019 up onto Q1 2020. So when you see the economy contracting and then you see your population growing, then naturally your GDP per capita, because like I said earlier, You have to be looking at what the GDP is and dividing it by your population. If your population growth is higher than your GDP growth, then naturally you would see that your GDP per capita wouldn't be doing so well.
You know, we call South Africa the continent's most industrialized nation. And when you find out that this most industrialized nation on the continent is facing population growth rates of around 1.3%, depending on who you talk to. And this is from 2019. But then you're also looking at 2019's GDP growth rate around 0.2%. And then for 2020, it was -8%. This industrialization tag that we put on South Africa, should the country still keep it?
Yeah, so South Africa, basically, like you mentioned, right, mining, agriculture, and manufacturing and all have been the bedrock of the South African government. It's a good way to go, but I think the major challenge that they need to fix is their power issue. They've had power cuts, which prior years used to be unheard of in South Africa. And when you have an industrialized nation, which also focuses on mining and agriculture, then you would require or you need to ensure that you have constant power to continue to boost the economy. So with the power cuts, load shedding, trying to manage power across various sectors, it continues to be a challenge for them. So one thing they need to fix is their power issue. Without that, it's difficult to continue to go the route of manufacturing and trying to be an industrialized nation.
Yeah, Eskom is a massive drain. So we're hearing what analysts say, and they believe, some of them anyway, that the GDP per capita will continue to decline in the medium term, even as the population continues to grow while GDP contracts, meaning the average South African will become poorer over the next few years. But let's break this down. How does a contracting GDP, how does a population growth rate that is beyond your GDP growth rate, how does that equal, let's not say poverty, but how does that equal a poorer South African? How does that translate to the average man on the streets, man or woman, as we would say?
Well, so the real GDP growth, like we mentioned earlier, for South Africa has been pretty tepid over the last few years, hovering between 0.2 to about 1.4%, right? So in as much as IMF estimates that we're going to see a growth in the per capita GDP over the next few years, 2021 to 2025, we're estimating from about $5,200 to roughly about $6,300. The major thing is that the citizens themselves need to start to feel or get the benefits of the GDP growth, right? So they are still not feeling it. They are not getting it really in their pockets. And once again, like we mentioned, when you have this load shedding, which is going across every single part of South Africa, you realize that the citizens continue to struggle because they themselves are struggling with regards to being able to increase output across various sectors, which naturally would impact the lives of the various South African citizens. So it's something that I definitely they need to look at, and something they definitely need to start to focus on.
So it's good you mentioned load shedding, because you also mentioned the mining sector as well, which has been a very big driver of investments for South Africa. We are still seeing some investments coming in terms of manufacturing and mining as well. What impact, if any, could these investments actually have on the economy as it stands, even if you sort of take out the Eskom conundrum, which has now become such a massive issue? It's taken decades to face, but now you're at a situation where it seems everybody just doesn't know how to fix Eskom. So if you remove Eskom from the equation, what, if any, impact could some of these investments that are still coming in manufacturing and mining, what impact could they have possibly on the economy?
Well, mining and agriculture have basically been part of the economic bedrock for South Africa for years. It's very rich in mining resources, in mineral resources, and it's the world's largest producer of an exporter of gold, platinum, chrome, manganese, and coal. So definitely, while the diversified economy, and for one that is rich with all these minerals, then it definitely makes sense for them to easily continue to pursue this route rather than trying to go the route of things that you do not have. I think one thing that they might look at might be more value added than just exporting. And that's one thing that the African countries have basically struggled with. So not just to extract the minerals from the ground, but also to convert these minerals to the finished product, which is the value adding place. Because you realize that the profits, right, that you make is much higher when it comes to the finished product versus just exporting the raw materials. So that is a point, that is a part that most African countries need to start considering and start focusing a lot more on.
Very true. So a 2020 PricewaterhouseCoopers calculation of different scenarios for South Africa suggests that it could take between 2 and 5 years for GDP and employment to return to pre-lockdown levels. What work needs to be done to bring these numbers back up? And of course, we're keeping in the back of our minds that South Africa just exited its worst recession in about 28 years. So bringing everything together, all the equations, all the numbers that go into whatever calculation we reach, it just simply is not looking good. So what work needs to be done?
Well, the structural problems for South Africa cannot necessarily be fixed overnight. It will take a while. And this is the same basically in almost any country in the world. And as PwC rightly noted, the government will have to switch from a role of being a controller to being an enabler. And you need to start considering how to enable their citizens to participate in growing the economy and laying the grounds for businesses to thrive. So you need to let loose control of some of the state-owned assets that have become a liability for them, and also start to achieve achieving the much needed reforms can take about 2 to 5 years.
Yeah.
But it's definitely something that they should still look at, and it's something that I think they've started looking at and going in the right direction. But you need to get your citizens coming in. For instance, you talked about ESCOM and decentralizing power. If you allow citizens start to produce power, or allow various organizations start to produce power, that definitely reduces the issue of power costs and load shedding. And you start to get more and more people involved in various sectors of the economy. And that is something that we need to let them, they need to do, and not just in South Africa, but really across the African region.
All right, Nnamdi, we're going to take a break. When we come back, we'll touch base on what role the vaccine rollouts could have on South Africa's economy. We'll also look at seasonally adjusting growth. That's been something that South Africa is looking at in terms of recording some of these very important and vital numbers. What does that mean in the long run? How does it translate to maybe a brighter outlook for the economy? We'll get into that conversation. And don't forget, NC4 to watch is also coming up. This is Business Edge. We'll be right back. This is Business Edge, and we're taking a look at the figures coming in for South Africa, with the GDP per capita hitting some of the lowest numbers not seen since 2005. My guest, Nnamdi Nwizu, co-managing partner, Comercio Partners, is still with me. Nnamdi, let's take a look at some other ways that South Africa is getting some of these numbers. Now, recently, they started seasonally adjusting growth, basically on an annualized basis. And this was recorded at about 6.3%, which is higher than predicted by many economists and analysts. They had projected that Q4 growth would be between 5% and 5.5%. So before we get into what the numbers mean, how does this use of seasonally adjusted growth affect the readings? Why go this route rather than what they've been doing traditionally?
So on a quarter-on-quarter basis, if you look at Q4 2020, you're right, economy expanded by about 6.3%, driven by improvements in manufacturing, construction, and in trade. But manufacturing jumped to about 21%, construction was up about 11.2%, and trade rose about 9.8%. Well, it's not necessarily a sign of a broader recovery, but more of a bounce back from a very steep decline that they suffered. So if you look at it, in the second quarter of 2020, the economy contracted by about 17.1%. If you are to analyze that, that's about 51%. So while it's a bit surprising to see South Africa exceed predictions, we still think that the improvement is not completely unexpected. If you look at a lot of economies globally, you would see that they all also had quite some steep, sharp rebounds based on the fact that they're coming from a low base and they had suffered steep declines over time. So it's still not, they're not out of the woods, And if you look at the full year figures, GDP figures, you see that they still have a lot of work to do.
Okay, so we are now, some would say, in the post-pandemic era with the number of vaccines rolling out. We know that South Africa has gotten some vaccines, and it was in February when the finance minister announced that they are allocating 10.3 billion rand to fund the massive vaccination program for the next 2 years. What role do you expect the rollout of the vaccines to play in helping the economy rebound, if only even slightly?
Well, definitely any economy that gets vaccines for COVID naturally would reap the benefits big time. Because basically, we know that South Africa has had quite a number of shutdowns. If you look at the fact that they closed a lot of businesses, closed restaurants, closed things like the pubs and co, right? Limited the sale of alcohol in the public, hospitality sector would also have suffered from this. So naturally, it would help. If you roll out the vaccines, then you'd have economy being able to open fully. Tourism, which would have dropped, would also start to basically pick up once again. We also know that a number of countries have banned flights to and fro South Africa due to the fact that they have this South African variant, which seems to spread a lot faster than the regular COVID vaccine variant. So with all of that, put all of that into place, and then you'd see that, look, it naturally would make sense. If they get their vaccine and the vaccine works and starts to ensure that their decline in the growth of COVID works and they can start to open up the economy, then 100% the economy will start to benefit from them. And I would say that South Africa is one of the forward-looking countries when it comes to vaccine rollouts. Countries like South Africa and Egypt are in a much better place than Nigeria would be when it comes to COVID vaccine rollouts. So very impressive.
Okay, let me take us back to the speech by the finance minister once again. He also announced that the Department of Small Business Development would get about 4 billion rand over the next 3 years to support township and rural enterprises. We also saw an increase in alcohol and tobacco duties as well. Specific excise duties on alcoholic beverages would increase by about 8%, which is also a secondary conversation that South Africans are having as well. We also know that there was a few changes to the personal income tax, but overall, it was good news for taxpayers after the National Treasury decided to reverse an earlier decision to increase personal income tax in a bid to raise an additional 40 billion rand. This decision has been one that many South Africans have welcomed, but also analysts are worried about it. If they didn't raise the taxes, they still need to make more money. Where can South Africa make money when they're not raising the taxes on the people? Which, of course, means a bit more money in South Africans' pockets that they can spend in the economy. But it's hurting the economy and it's hurting the Treasury's ability to raise money. So what do you think is the fix in this situation?
So it's a bit of a catch-22. The country needs more money, but it's difficult to tax the citizens a bit more because the citizens themselves have been hit hard by COVID shutdowns and COVID-ravaged economy. So that's why I said a bit of a catch-22. The government needs more money. One of the easiest ways to make more money is just to raise taxes.
Yeah.
But at the same time, the citizens are crying because a lot of people have lost their jobs, businesses have shut down, small businesses have suffered, the large ones have also suffered. So where do you expect them to get money to pay the higher taxes they're trying to put down them? So which is why I think that the vaccine rollout is extremely essential and extremely key, because once you can get businesses back up and running, get people back into employment, then it becomes easier for you to start to levy your taxes on them. In the meantime, what some countries are doing really is just trying to spend their way out of the recession or out of the downturn in the economy. So even though the flip side to that also would mean increasing your debt, because it would mean that South Africa would have to raise money, maybe issue euro bonds or look for other ways to borrow, which naturally would make their debt situation a bit worse. So it's a tough one, but eventually, once they can have people vaccinated and they have things back on track, then we'll most probably see them start to implement these tax raises that they wanted to do.
Okay. So finally, Nnamdi, before I let you go, South Africa's economy exited its longest recession in 20 years in December. And by all accounts, it may only get back to pre-COVID-19 levels by 2025, while like many other countries, it does remain vulnerable to local resurgence of the pandemic. Unfortunately, the country also recently recorded its worst unemployment number in years. 7.2 million South Africans are unemployed at a 32.5% rate, which is the worst since the surveys began in 2008. So we know there's obviously very serious and hard work ahead for the country. And you've listed a number of things they can do. Get Eskom on board, making sure that there's electricity for the small businesses, for the mining, manufacturing, and agriculture as well. But in the immediate, in order to sort of ramp up recovery and make things a bit easier for South Africans, what do you think South Africa needs to do in the immediate, in the now, that can start changing things around?
Well, I talked about reducing control and starting to enable their citizens to participate more in the economy. I think that is one way they can do that. The second thing would be to improve their vaccine rollout and get the economy, kickstart the economy once again and get things moving. And then the third would have to be, unfortunately, having to borrow more to spend, have more money in the hands of citizens, which would basically ensure that people are spending more, and the more they spend, the faster the growth of the economy. So I think those are three things that they can look at in the very short term. Solving their power issues and other things will most likely take a much longer period. But if they can address these things right now, then you start to see, expect that you start to see some economic recovery.
All right. Thank you so much, Nnamdi Nwizu, co-managing partner, Comercio Partners. Thank you for joining me on Business Edge.
It's been my pleasure. Thank you for having me.
All right. So let's wrap things up, and we do that with NC4 to watch, and let's give it to you straight. No chaser, as they would say. Nigeria's Petroleum Products Pricing Regulatory Agency, PPPRA, has fixed the pump price of premium motor spirits, also known as petrol, at 212 naira 61 kobo per liter for the month of March. Now, this new price, according to the agency's premium motor spirits guiding price released to stakeholders, is supposed to commence from March 1st and run till March 31st, 2021. Egypt's information and communications technology sector has achieved 17% growth during the second quarter of the current fiscal year 2020-2021, and this is according to the Minister of Planning and Economic Development, Hala El Said. In a statement, El Said said that the public investments pumped into telecommunication projects increased the sector's contribution to Egypt's growth by 3.5%. South Africa's rand fell against a stronger U.S. dollar early on Friday, but it looked set for weekly gains after riskier currencies this week drew support from the calmer market sentiment. Early on, the rand traded at about 14.94 rand versus the dollar, about 0.61% weaker than its previous close. The currency has gained more than 4% since the start of the week. And finally, Kenya has lifted the ban on imports of Ugandan and Tanzanian maize with strict conditions on exporters as the country seeks to curb shipping in the cancer-causing aflatoxin on the imported crop. The Ministry of Agriculture said that all stakeholders dealing in maize imports would be required to be registered, and consignments coming in must be accompanied with a certificate of conformity on aflatoxin levels, and that traders have to issue details of their warehouses. And that's it on this edition of Business Edge. Don't forget to follow us on social media. We are at News Central TV. Head to our website, www.newscentral.africa. And of course, stay with us online, off the ground, and offline with our mobile app. And until Monday, do have a very pleasant weekend. I'm Tolulope. Adeleru-Balogun.